A common and often confusing part of estate planning is taxes. Who pays and how much? To help make your life, your beneficiaries' lives, and your estate planning process a little easier, I'm going to walk you through the answers to one of our frequently asked questions. Do trust beneficiaries pay taxes? To start, what exactly is a beneficiary of a trust? A beneficiary of a trust is usually an individual, or sometimes a group of individuals, or even an entity like a charity, who will inherit some portion or share of a trust. Now, how does a beneficiary actually receive their inheritance? Beneficiaries can inherit their designated portion in one of three ways. One, an immediate outright distribution, where the beneficiary receives the funds as a lump sum payment with no restrictions on how the beneficiary may use the funds. Two, staggered outright distributions, where the beneficiary receives the funds over a period of time or at specified intervals, usually in a set amount, with no restrictions on how the beneficiary may use the funds once received. Then three, in trust with discretionary distributions, where a trustee holds the beneficiary's money in trust and determines how and when the beneficiary receives the funds. Usually, a grantor will have left behind additional instructions and stated wishes about the amount and timing of these distributions. When a grantor passes away and his or her revocable living trust becomes an irrevocable trust, the trust will use its own taxpayer identification number. The trustee will then report the trust's income on a separate income tax return. If income is then distributed to a beneficiary, as we discussed inheritances before, that income will keep the same character as it had for the trust. For example, if the trust had long-term capital gains and distributes them, the beneficiary will have long-term capital gains. Once the beneficiary has received that income, the beneficiary themselves will report that income on their personal income tax return. As beneficiaries receive their trust income, the income taxed that accumulates is taxable and paid by the beneficiaries as part of their own tax return. It is important that trustees review the trust's income and its distributions with their tax advisors at the end of the year. Fortunately, the IRS grants trustees the option to treat distributions made during the first 65 days of the tax year as being made in the prior tax year. So the trustee and his or her tax advisors do have a couple of months to get this done. During that review, they can figure out what the best results would be for the beneficiaries and structure the distributions to achieve them. All that being said, taxes and navigating the best course of action with your trust can be confusing and overwhelming. You are not alone in that. We help people in these types of circumstances every day. To learn more about how trusts are taxed and other important estate planning issues, give our office a call and one of our client welcome specialists will be happy to assist you.